Hello everyone, welcome to today's weekly market insights. Now, as we have a look at the calendar, see what was going on this week, a few data points to note. We had the RBA out on Tuesday, the Bank of Canada on Wednesday, bit of inflation out of China on Thursday, and we also have a bit going on today. But at the forefront of markets thoughts this week is still the virus developments, the Omicron variant that wreaked havoc across markets last week. Now, we had some updates this week out of Pfizer that they in fact have said that their vaccine, with the help of a third booster shot, with a third jab, is effective in treating the Omicron variant, in repelling the Omicron variant. Now, that has obviously spun a bit of positivity across markets this week, a bit more positivity than the massacre we saw at the back end of last week. Now, as we come across to the case figures and we have a look across to Germany, we can see daily new confirmed COVID-19 cases have fallen. They've dropped. Obviously, you can see the sharp rise here. We have since pulled back. As we come across the deaths, this is still rising, but is this just a carry-on deaths from these cases, or are deaths going to rise more? There's been studies out of South Africa that this virus is in fact not as deadly as other variants, so it will be interesting to see how the German cases react over the coming weeks, whether we start to get a pullback in deaths as well, and we can continue to see some more positivity across markets. The S&P this week, as we can see, has bounced back, has had a nice bounce back. It's on course for its first weekly gain in 3 weeks, also for its largest weekly gain since February. As we look across the FX, the two main movers across FX were the Australian dollar and the Canadian dollar, risk-sensitive currencies, commodity-linked currencies, proving as a strong upward rally at the beginning of this week for the Australian dollar and a strong upward rally for the Canadian dollar, meaning short dollar CAD. Now, we were helped by the Australian central bank in this move. Markets were expecting some dovish comments. Not that we got anything overly hawkish out of them, but the fact that we did not get as many dovish comments as markets initially believed, it proved to be supportive for the Australian dollar in the coming day, in the days following the statement, the release of the statement. Now, as we come across to the Canadian dollar, a lot of this was driven by the price of oil. If I just get a bit of oil up, give me 1 second, and we have a look at oil. We have had this bounce back in oil driving the price of the Canadian dollar higher. We did have the Bank of Canada out this week. When we come back here, we had this on Wednesday. Now, they did push back on their expectations for rate hikes. They said until the Omicron variant is stabilised and we can move away from that, they are going to hold fire on a rate hike, which markets seen as a bit of a dovish comment, causing a bit of a sell-off in the Canadian dollar. But overall, throughout the course of the week, we are still positive for the Canadian dollar. Now, as we come back to the calendar and have a look at inflation later on today at 1:30, some market participants believe that we could see CPI up at 7%, which could cause some jitters across markets. By this 7%, I don't mean this number. I mean the total figure, which is an orange data release for the total amount of inflation across the economy could hit 7% later on today, which obviously does cause some jitters in markets going into the weekend and gives us something to think about going into next week. Whether that happens or not, whether that materializes or not, we'll have to wait until later on today to find out, but that would certainly make things interesting heading into next week. Now, we've got a very busy economic calendar next week. As we have a look through, we've got some employment figures out of the UK, but then we get into the kind of the business end of the week. We've got inflation out of Canada. We've got the Fed on Wednesday. We've not just got the Fed, we've got the economic projections, the dot plot, potentially signaling a rate hike earlier than markets have anticipated in the past. As we come to Thursday, we've got the Bank of England, again, interest rate decision, statement, press conference. We've also got the ECB as well with the same thing. So we've got all the main central banks, including the Bank of Japan on Friday morning. So we've got the Fed, we've got the Bank of England, we've got the ECB, we've got the Bank of Japan. We've also actually got the Swiss National Bank. They're a little bit lower down the list in terms of importance, but we've got a raft of central banks out next week. The economic calendar is likely to dominate price action throughout the week, and it will be something we will have to keep a close eye on throughout the course of next week. We'll look ahead to inflation later on. We'll see how that comes out. Does it impact the Fed's thinking? We will have to see when it comes to next week, but eyes will be firmly on inflation later on today, and then we will speak a little bit more about the central banks as we come into the back end of next week. That's all from us today. Please do join us next week for another weekly market insights. Thank you.